So big things are definitively happening in the market and the world. Let's have a look at Harmony Gold mining. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So we are definitively seeing some sell-offs and volatility in the market. During these types of times, there will be huge sell-offs, but also huge rallies. So definitively expect chaos. So we will look at a theme that I call precious metals. 34% here from the 52-week low, but we're at minus 26% away from the highs. Higher is Harmony Gold mining, 2.3% up today, 40% here from the low, minus 27% away from the high. Here is the company's website. Mining with purpose. We are a responsible global gold producer committed to sustainable development and creating shared value for our stakeholders while leaving a lasting positive legacy. Here you can see some numbers. They operate in South Africa and Papua New Guinea. Okay, so let's jump into the charts. This is very big picture and weekly data points. We can see that the stock certainly likes time cycles. The time cycles have differed throughout time, but there's some. I think that these time cycles here fit relatively nicely with price action: rise, decline, rise, decline, rise, decline, rise, decline. Based on the time cycles, we are still part of a declining phase, but obviously, like a major geopolitical event, like what is developing, it could obviously disrupt, the time cycles. So we are still, very far away from the highs that we made back here in 2002, 2006, and also in 2011. We see that there's a very interesting technical pattern developing at the moment, right here and right now, and that is a head and a shoulders pattern. That is, interpreted as bearish. But then again, we have a tendency to see support at the neckline. Okay, so what I have drawn in here is that we are currently stuck between resistance from the blue 100-week moving average, and we have support from the red 200-week moving average. Okay, so these are very key levels. We do see that the 100-week is actually holding back the bulls so far. So it is a level where the bears are just going to keep adding to their short positions as long as it works. So it is a clear level. And also the bulls who are, of course, long, they are also likely to put on hedges when price interacts with that resistance level. Okay, so let's jump here to the daily data points. We do see that today there is this reversal candlestick. We do see that some of the prior corrections that we have had for this stock right here, and also here, we did initially see this reversal intraday candlestick, and then we did have a pullback. So that is something that could happen now as well, because this is a major reversal. It's still early in the session, but as we saw here with the weekly data points, Harmony Gold likes to go up and down, up and down, up and down, up and down. It is rare for the stock to be up multiple weeks in a row. It usually has a pullback. Given the resistance level, if it has a strong enough catalyst, then it will be able to break through it. But it needs to really break through it to get the bulls really eager, and also to get the bears to panic, cover their shorts. Okay, here we have the other indicators. MACD is improving due to, of course, the rally. We do see that the weekly RSI, it is in a zone that it recently has not been able to get higher than, okay? So there is a tendency for there to be some pullbacks. If we go here to the daily data points, then you can see it here yourself. This level here on the RSI around 60 seems to be what spooks the bulls and excites the bears. So it sort of has developed its own overbought and oversold RSI levels. Also, in terms of the distance from the 20-day moving average, we are at a level that has a tendency to trigger pullbacks. So the line in the sand here is that we have 100 VMA resistance, and In terms of the technicals, this was a bit of a messy thing because we do have head and shoulders. Then again, we do have support, and we also see that the bulls have been able to hit, the resistance level multiple times, and the more times the bulls are able to do that, the higher the likelihood it's going to break. And given the geopolitical situation, that is a major catalyst. But that is sort of beyond the technicals. Looking purely here at the technicals, given that it has a tendency to pull back frequently, and we are at the RSI level and also to an extent the PBO level that has triggered pullbacks very recently, I think that the odds do favor the bears. Not in a major way, but I will give this one a -2. Here is the seasonality data for Harmony Gold. To the right, you have the average over the last 5, 7, and 10 years. So you can see that, the seasonality, it is usually bearish here heading towards, late May. Looking here to the left, over the last 5 years, we do see that February is a very strong month, and we are currently in February. March is, however, weak. Over the last 10 years, then we do see that from February heading towards May, the seasonality weakens. And then over the last 20 years, then February is the strongest of all months, though March and April and May are weak. So the seasonality here is a bit messy because the current month, and we are still, in that month of February. This is the 24th of February. It is a strong month. It is the strongest month, and I think that the bulls need to get some benefit from that in terms of the score. Then again, the seasonality for the coming months, it is, weak historically. I think taking it all together, I will give this a -1. Next, we will look at the fundamentals. Here we have SACS. They have a number for sell, but a value and a growth. The industry rank is in the bottom 39%, mining gold. There is a yield of 0.71%. Market cap $2.5 billion US dollars. And what are the insiders doing? Well, SACS has no information about insider activity. Looking here at Market Screener, and we go to the... Unfortunately, Market Screener didn't have the stock, but I did find some price targets here from Finviz, though they are really old. The only thing I do get here is a recent downgrade here from 2021 by Morgan Stanley, but that is a long time ago. So to give the fundamentals here a bit of a rank, I think that the issue here is that we do have limited data for Harmony Gold. SACS did, however, see that the value and the growth scores were really good, but they did have a sell score on it. And there isn't, a change here in terms of these analysts. From Finviz, it was, that downgrade. So the entire point here is to figure out, what are the people who look at fundamentals most likely to do? That's the point of this score. Are they going to be bullish or bearish? And I think that given the data we do have, it's very messy. I think I will give this one ever so slightly here to the bulls. I give them a 2. Next, let's look at relative performance. So here we have some correlations. So 38 with S&P 500 long term, 87% with gold futures, 94% with the gold miner ETF GDX, and then -60% with the dollar index. Daily data points, 17% with SPY, 58% with gold, and 65% GDX, then 26% positive with the dollar index. So the relationship, as an example, between a gold mining company and the dollar index, it's way more complicated than many people think. The correlation here with the gold and the GDX is very strong. So let's look at GDX. Here we have GDX, and GDX is also fighting the blue 100-week moving average. We have seen a very strong rally, and we are meeting resistance at that key level. So a lot of people will assume, right, that given that we have all of this turmoil with Ukraine and Russia, that there's going to be like a huge run into gold. That is a possibility. I am definitively long-term bullish on gold, but it's very important to be aware that there are, a run on gold would be bad for the dollar. So all the mechanisms that are out there to protect the dollar, they are definitively in play at the moment, okay? So yeah, that's something to just think about. If we do see a major run on gold, that will be severely dramatic. And that is because it means it sends a very strong signal about what people think about America. So definitively watch gold very closely going forward. Yeah, on the GDX, we see this major reversal candlestick today. And that's something we have seen before previous pullbacks. Like here, got a pullback. Yeah, I got some reversals there as well, and then we did get some pullbacks. Looking here at the MACD, also RSI and PPOs, we are at very high levels that have a tendency to trigger pullbacks. Here we are looking at Harmony Gold against the GDX, the gold miner ETF. And we do see here that long term, this one has formed a rounding bottom, which means that, being in Harmony Gold has outperformed being in the GDX. So that is interesting. So this is nice for Harmony Gold. It's an overall bullish long-term development. When we go here to the daily data points and look at the seasonality of the pair, we do see here that Harmony Gold has a strong tendency to underperform the GDX here heading towards mid-June. That is obviously quite relevant. Okay, so that would be a pointer to the bears. If we then compare the GDX against the SPY, S&P 500. So here is GDX against the S&P 500, and there's a very, very fundamental change happening at the moment. Really, 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 really big deal. So we've gone from being in a very substantial downtrend to then moving much more sideways. And it's very much a possibility that this will happen in the future. So this is a very interesting development. We see that a key floor was actually made. So let's draw that in. So it seems like the key event was down here. So let's draw it in. Here is where a floor was formed. Key support. We have rallied from that support. It also seems like there are some kind of time cycles as well, so let me draw that in. Yeah, seems to be some mega time cycles as well that are beneficial to the bulls, like a major rising phase here for GDX against the S&P 500. Looking here at the seasonality here on the bottom, it does show that looking shorter term, GDX actually tends to strengthen against the S&P, but looking long term here with this red arrow, looking at the last 10 years, then we do see that GDX has a tendency to underperform the S&P 500. In terms of the long-term radar, I definitively think that the GDX against SPY bottom is very interesting. That is very, very interesting long-term. But that is very long-term though. That was weekly data points. So in terms of the relative performance, we do see that Harmony Gold has recently longer term, started to strengthen against the GDX. That is good. GDX is strengthening against the S&P 500. So in terms of relative performance, I will give this one a score of 4. So the average then, taking all the data together, is a 0.8. So I'm feeling more bullish than bearish. The reason why I'm not feeling like even more roaringly bullish, I do think that the 100-week moving average resistance is very key. It is a key resistance level, and until we break that level, we will sort of like be stuck in that range But when we do get a breakout and be able to use it as a support in the case of a pullback, that is when you really are going to see big things with gold. And to be perfectly clear, even though I have highlighted some bearish points in this video, long term I am very much bullish on gold. It is just very important to be aware that a major rise in gold would be a massive downvote against America, the entire American dollar-based financial system. Given what's happening now with Ukraine, Russia, NATO, the entire thing, this is a huge event. This is definitively a time where all the powers that are boosting the dollar will come out in full force. And I think that partly explains the pullback we are seeing today in the gold miners as well. When it comes to geopolitics, if the sanctions against Russia are too severe, then there is a very real possibility that an alternative to the dollar system will be developed and will be put into action. And that could very well be based around gold, somewhat related to some cryptocurrency, who knows? But the thing is that, Russia is not alone. They have China, they have this constellation of other, partners that are sort of like feel alienated and sort of like that are cast as like the villains in the current overarching global system. And if they were to come together and create, an alternative system, then it could be very dramatic for gold and for the dollar and for the entire post-war financial system. But that is definitively a more longer term narrative. Whatever you do, of course, you want to use stops and be as market neutral as possible.